From the floor of the CME Group, this is Danny Riley on today's Cash Close. You know what? The S&P did exactly what it did all week long today. It went up. And there was really very little that anybody could do about it. It was very much a thin-to-win environment here. And as the S&P, as of last week's low, the S&P has rallied a full 100 handles. I believe it's one of the from the old 1640 lows. I believe it's one of the quickest 6% rallies I've ever seen. But this desk is saying that they've seen bigger rallies before. Now, as we come into the end of the week, I got to admit it's been a lot slower here today, and the volumes are showing that. The high of the day in the S&P came in at 1740.30 midday. The low came in at 1730 and a half early in the day, and last we're 1738.70. We're up 10.9 handles. It's unbelievable. And everybody around here is pretty much stunned that we've not had any kind of pullback here. Total volume, we've got 1.45 million minis traded, and we've got 3,000 big S&Ps traded in the pit. MOC, we had 250 million to sell. Monday, we've got Charles Evans speaking. They got the Chicago Fed National Activity Index. They've got existing home sales. We've got the API. But the big thing here is Tuesday's unemployment report. It's going to come in at 7:30 like it normally does, but not really normally. And the expectations is for 185,000 non-farm payroll. Now, we don't know what effect that number is going to have on it. It's way past due. But that said, you know what? In the world of risk-on, risk-off trading, there was a ton of risk-off last week, and it's been all risk back on this week. We're going to leave it like that. The S&P is doing what it's been doing for many, many Fridays right now. We're seeing a late-day melt-up. You know, not as big as we usually see, but cash came out to sell, futures dipped a little bit, and then the futures are rallying again. We're going to leave it like that. We'll see you on the opening print on Monday.